The next setup and playbook position that I take is called a celery play. What the celery play represents is more confirmation that the candle is going to move in that direction in which you're guessing, pretty much, because this is a guessing game, but probability suggests that the candle is going to move in that direction. So say this is the 30-minute time frame. Say this is a 30-minute time. Wait, sorry about that. Say this is the 30-minute time frame. Say it's a 30-minute time frame, and we just got a breakout, and we're bullish. 4 hours bullish. You know, this is the bottom wick being created right here, and we're getting ready to take off. A lot of times, and this is a very, very high winning setup, because what it's indicating is price is staying above this range, so it's more probable that price will be retesting the range above it rather than faking out. And what the celery looks like is it's a candle. It doesn't matter how it closes. Let's just make that very clear. It does not matter how it closes. So say we have buy stops set on the break of this high right here, but we never get activated, you know, targeting this support over here like we talked about, slash resistance. We're targeting this area right here. You know, this is our target area. Say we have buy stops set right here. And, whoops, sorry. And we don't get activated. So the candle just kind of hangs out. You know, I'm going to have my stops below, you know, the current candle, 30-minute. But say we're just hanging out and price is just fluctuating. What that's going to look like on the 15-minute time frame is a lot of times when you get a celery play, it's usually a 15-minute time frame creating the low for the 30-minute time frame that closed above. And what I mean by that is, like I said, it does not matter. So say I have a buy stop on the break of this high right there. That's our buy stop, but we're not being activated. And on the 15-minute time frame, and this is how you can also know that you can keep your trade is still valid, and you can keep the buy stop or sell stop depending on how the market's moving. A lot of times, so this is the 30-minute time frame, and you never get activated. Say you create this top wick, but you never get activated. All this is price on the 15-minute time frame creating that bottom wick so that the next 15-minute time frame can push us through. And what that's going to look like is it does not matter how price closes in terms of color, meaning the body of the candle does not matter. Just because it closes red doesn't mean it's an invalid trade. And so what that's going to look like is something like that. Don't mind the ugly candle representation. But what that looks like on the 30 is that it's just this candle right here creating its bottom wick, because we are bullish. It's just this candle on the 30. This is the 30 that I'm drawing, creating its bottom wick to continue moving upward to go retest the top of this range in which we're targeting. Very, very, very good trade to be taking as a seller, because what it's telling you is that on the 15-minute time frame, like I said, it spent the first 15 minutes creating that bottom wick on the 30-minute, which that's what we see here. As you can see, that is what we're seeing here. This is the 15-minute, this is the 30, and if you look at it at the 30-minute time frame, this is what we're seeing. But if you're looking at it from the 15-minute time frame, you're seeing that it's spending the first 15-minute without breaking these highs, coming down and creating the 30-minute bottom wick to continue bullish. And this is just more confirmation. It has a very, very high probability of retesting the range. And by what I mean by more confirmation is that price is staying above this overall range right here. This resistance, price is staying above that. So it's more probable that price is going to continue to go retest the top of this range. And so I love the celery. Celery is probably one of my favorite plays, because it's just the more confluence you have to enter a trade, the more probable that it's going to work out in your favor. And it's one of my favorite trades. When you see it, you're like, wow, this is really setting up, especially during high times of volume. Like I said, it does not matter if this candle that closed like that, closed red or green. It just has to close with kind of like a small body and a big rejection wick to the downside because we are bullish. So this is ideal. This is the perfect trade. And guess where that bottom wick is tapping into? It's tapping into where price came from, has a small top wick, but a big bottom wick, kind of like a hammer, suggesting, okay, the new 15-minute, you don't need much of a bottom wick. So say this is the 15-minute time frame and this is what it looks like. I have it green, I have it red, it doesn't matter as long as it closes above the range and it looks something like that. Say the new 15-minute opens, I don't need a bottom wick to enter this trade. And that's what I was going to talk about, is because I talked about in the breakout, 85% of candles create top and bottom wicks, but I don't need that because I'm basing this trade off of the 30-minute time frame. So if this candle, ideally you want this candle to create a bottom wick because this is the 30-minute bottom wick that's already been created. We have to remember that. So I don't need a bottom wick, but ideally you want, a smaller bottom wick to be formed, and then you still have your entries on the break of the highs because this is a valid trade. So what that's going to look like is break of the highs, and you're going to go target these areas where price may reject from. But like I said, it's not that important that I get a bottom wick or a steep bottom wick because my trade is based off of the 30-minute. I'm understanding and I'm correlating that the previous 15-minute, which is the first half of the 30-minute, is creating the bottom wick. I don't need a bottom wick because it's already created on the 30-minute time frame. Because what that's going to look like on the 30-minute time frame is it's going to look like, say we had our breakout. This is now the 30-minute time frame. Say we had our breakout. What that's going to look like on just the 30, if you're not looking at the 15, it's going to look like just like this. You drove up, but price created that bottom wick. And on the 15, that's where you have that celery play. And so it's just, you have to tell the story. Trading is just like telling a story. You have to siphon out the 4-hour from the 1-hour, the 30-minute to the 15-minute, and you have to tell the story. It all needs to correlate for you to have and for you to take good trades. And so that's why you always start with the top-down analysis. From going from the daily to get a direction on where price may want to go in the session, the 4-hour, especially for your bias and direction, and then you drop down to the 1-hour, the 30, and the 15 for your levels. And so this is a celery play. It's one of my favorite entries because it has a very high probability of working out in your favor.